Hello everyone, this is Sebastian McMahon from IA Financial Group and I'm back with the weekly review for the week ending April 14, 2023. So looking at the markets this week at the close on Thursday, negative for bonds, positive for equities. Canadian dollar was strong, so it's a risk on tone that continues to be in the market, or at least some optimism in the market. Higher rates this week. We had inflation that continues to slow down. This is supporting market sentiment, and the Canadian dollar, of course, the price of oil is higher since has been higher for a few weeks now. Of course, following the OPEC Plus decision to cut production, so this is supporting the Canadian dollar, but it's also the risk on tone. This is the kind of currency that we have in Canada when the markets are buoyant. Well, Canadian dollar tends to be stronger, and when the markets are more fearful, the Canadian dollar tends to be under pressure. So if you bring everything back in Canadian dollar, TSX had a very strong performance of about 2% this week. The other highlight is the price of gold continues to rise. We're about at all-time highs again in terms of dollar value, nominal value. So interesting developments there. Let's talk about the topics of the week. Bank of Canada. Don't rule out more rate hikes. That was kind of the message that the Bank of Canada wanted to get out there. It succeeded when you look at the highlights from the media. Mr. McLem says that inflation is falling quickly, but emphasizes the long fight to return to 2%, not ruling out future rate hikes to get 2% inflation, to get to the inflation target. So this is the message. Mr. McLem even said that they discussed spent almost equal time thinking about pausing or hiking again. So it's not a given that we'll stay in this pause. The Canadian economy is stronger than expected in the beginning of the year. Inflation is stronger than expected, more resilient than expected, and that brings us maybe to the forecast here. The bank is upgrading its forecast for 2023, downgraded the forecast for 2024, and the numbers in parentheses are the previous forecasts, the one from the latest monetary policy report. The previous one rather, and now consumption stronger, GDP stronger, inflation still at about 3.5% in 2023. When you look at next year, while the economy should be weaker, they're still thinking that inflation will continue to fall towards the target. But let's see what the road looks like, and what the road looks like will dictate whether we have more rate hikes or we stay in a pause. But monetary policy works with lags. It can be unpredictable. The speed at which these lags, how fast or slow these lags act. So we'll see where we end up. The Fed, now we had the minutes from the Fed. So of course the Fed is the most important economic agent in the world, and also for the markets. And what goes on beyond closed door, we get a sneak peek of that in the minutes. It's interesting to read those, and seeing also that the staff is pretty much forecasting a recession now for 2023. They're worried about the stability of the economy, and we are and also the banking turmoil, let's say, of last month was weighted on the risk sentiment, on the optimism, on the forecast here. But still, they decided to hike. Likely they will hike again in May, and let's see if there's a pause coming or if they will continue after that, because the recent forecast, we mentioned that a few weeks ago, they see the economy as getting weaker and weaker and weaker, but inflation being stickier. So that means likely that they need to fight inflation even harder than they're doing now. So let's see where we end up with the Fed, but we got the inflation figures this week. Total and core inflation year over year on the left. The interesting take, a few interesting takes, is that total inflation is slowing down still, and now core inflation year over year is higher than total inflation. So the slower moving parts that are in core inflation, let's say when you take out energy, when you take out food, you have inflation that's more resilient, more sticky. And on the right, this is core inflation, but it's month over month. And as you can see, month over month, 0.4% again. Let's see if you annualize that, you get about 5%. So inflation is still sticky. So the Fed is still worried about inflation. The Bank of Canada is still worried about inflation. They're still downgrading their forecast. And now the debate will shift later in 2023 about the balance of these two. Now central banks are really focused on the inflation part of the equation. They're ignoring, at least in the narrative, the need to balance that with the economic situation. Expect this transition to happen over the next few months. So what to watch next week in Canada? We'll have CPI inflation and retail sales, so we'll be talking about inflation again. And in the US, housing, we'll have building permits, housing starts, existing home sales. So lots on the plate next week. So ia.ca/economy, your go-to webpage. You'll find everything that you need there. It's always a pleasure to serve you, and I'll see you again next week.